Hi, good morning, YouTube. And I wanted to discuss, close my door. So I wanted to discuss a lot. I do run a CPA firm in Sugar Land, Texas. So it's a very small city, or medium-sized city next to Houston, Texas. Now, a lot of times I wanted to discuss, a lot of people wonder when they first start out their businesses, how do they get money out of their business to pay for themselves, right? How do I do it? What is the right process? And it's actually a lot more simpler than it sounds. And there is a process that people need to do. It's not like they can take it out every day or every week, but I want people just focusing on every month. So it's a very simple formula on how to do this. So let me show you how. I'm going to show you this through an Excel spreadsheet. I'm going to share my screen. Okay. This one is going to be set up as a schedule, like a single member, like a solo prop or a LLC. Okay. We're going to have what we say net profit, sorry, revenue, $150,000. Okay. And then you have revenue, and then you have expenses. Let's make it $75,000. Now, your net profit now, this is $75,000, right? So this is your net profit. This is how much money you made for that. Let's do it for every month. I think that'll be easier because I'm looking at it. So $6,000 in net profit for the end of the month, right? So this is for a single month. Now you have a net profit of 6,000. Now, how much money should you take out? One is what is called a distribution. I would say let's take out $4,000. The reasoning why you don't want to take out the total 6,000 is because you still need the operating cash flow for the business. So if you don't do that, you're not going to be able to, pay for your operation. So you have $4,000 is your distribution. Okay, this is how you're taking money out. So leftover money is the 2,000. Now, so a couple of things that you have to know. Yeah. The 6,000 is still going to be taxed. That's still going to be your net profit, and you're going to be taxed on that. So you may want to withhold some money just for tax purposes. So out of that 6,000, you want to realize that also that's your distribution, and that's how much money you can spend on your daily lives. This doesn't include taxes. Taxes is a different story on that. If you want to understand how much money you need to hold, you need to withheld just for tax purposes. So tax withheld is 20%. So you should also withhold $1,200 on your $6,000 of net profit. Okay. So that's a single month of solo prop. Let's go over it again. Your revenue is $10,000. Your expenses is $4,000. This is business expenses, not personal. So your net profit is $6,000. It's still gonna be taxable. You have distribution of 4,000. This is what you're going to write out a check to yourself from the business to your personal account. And this is where you're going to pay your mortgage, you're going to pay your rent, you're going to pay for food. Then you're going to have this leftover $2,000. This is what's going to be in for the following month. This is going to be part of your operating cash flow for the next month. Now, the $1,200 is what you need to put in a separate account into your personal where you don't touch. So you make sure you're saving up every month so you can actually pay your taxes at the end of the year or make your quarterly payments. This is one way. The second way is that you want to do this is a single month. This is a S corp, right? We have revenue of the same, and we also have business expenses is the same. is $4,000, right? Then we have net profit, this minus this, 6,000. With S corps, you also have to have a W-2 salary. So we're going to do 35%. Oops. 35% of the net profit. Okay. Then we're also going to have a distribution. So now leftover money after this is 3,900. So then we're going to do a distribution of $2,000. Left in the account is 1,900. Okay. So let's go over that again, just to make sure everybody gets it. This is a single member, right? You're just making not an S corp. Your revenue is 10,000. Your business expenses is 4,000. So your net profit for the month is 6,000. You take a distribution of $4,000, and then you have a leftover at the month. In the beginning of the month is 2,000. So this is what you're going to be spending your mortgage, rent, phone bill, all of these type of stuff. Then this is your tax withheld. Okay. Here, under an S corp, same thing, same revenue, same expenses, your net profit. But under an S corp, you're going to have a W-2 salary. This is called reasonable. This is very normal. If you don't, you can get a big penalty from the IRS. Then you have a leftover is $3,900 after you do your net profit and your W-2. So now you need to take another $2,000 for distribution. That's going to left in your account for $1,900. From the $1,900, you want to make sure that this is how you're going to take it out. This is and then you probably want to do tax-wise, you want to withhold. Tax withheld is the same. This times 20%. So again, it can be a lot. This is a very simple approach towards it, but you want to make sure that this is how you take money out. Don't take it out every day. Don't take it out every week. I recommend most clients take it out once a month. So, and also the misconception is, oh, you shouldn't take money out. You should be living on, you shouldn't be making money out of the profits of the business. How else are you going to eat? So the misconception is, oh, I never take money out for my business. I want to keep on growing. Is that you also need to eat. You still need to pay your mortgage. It's not really a business if you're not taking money out and paying yourself. So, all right. Well, I'll let you guys go and have a good day.